Good morning and welcome to Financial Preparedness Network. I wanted to come to you guys today and talk a little bit more about some options and the power of options. There's a lot of people that trade options that and day trade, just day trading shares also. They trade the same stocks every day. So they'll have a watch list of 10 or 20 stocks, and they just like one guy I know, he has 20 stocks and he trades them all year long. If something was to happen drastically to one of them, he might trade it out, but normally he trades just those 20 stocks every day. And then around the first of the year, he might substitute and take 3, 4, 5 out and put 3, 4, 5 new ones in there. But when you do this, I think it's a great way to do it, because you memorize, pretty much, the stock inside and out, how it moves. And if you're trying to do this to consistently make money, then this is something you might want to consider. Now, SPY, which is it's an ETF. An ETF is an exchange traded fund. And what they do is it tracks a handful of stocks. So SPY tracks the S&P 500. So it tracks the top 500 companies that are in the stock market, and it's weighted on just depending on, like, they hold so many shares of each company, and I think maybe it's Apple or Microsoft is the one that's the heaviest weight on it. So when Apple's down, or when SPY's down, a lot of times Apple's down, Microsoft's down, SPY's down. But I'm going to give you a tip here on. I know we've had a lot of volatility here lately, and but before I get into that, I want to say that SPY, it offers so many opportunities to trade. Right now, it's close to $500 a share, so it is. Sometimes the options can be a little expensive, but it gives so many opportunities, because it moves so much that a lot of days it'll give you 100% return in two different directions. And that's what I was saying about, if you just keep about which SPY. And I'm going to go into another video soon about, like, my daily routine and what I do first thing, as far as in the morning getting ready and checking the market and all that. But SPY is a good indication as to which direction the market's going to be going in that day. But I just wanted to point out that, like, this is and then again, as you can see, as always, I've got my price levels, and you can see what happens. But the bottom left down there, you see it on the bottom left. You see its resistance, and it's consolidating sideways just below it. And then it finally pushes through. Once it pushes through, we know that it's strong, and then it's probably going to continue up. So you jump in a position right there, and you see, and these lines are already pre-drawn from previous movements. So that way, you can expect what it's going to do once it gets to those lines. And sure enough, you see what it does. It pushes up, and then it kind of consolidates, and then it pushes right up to the line. And that line then it becomes resistance instead of support, and it bounces off of it. So as soon as it bounces off of it, we know that it's not going to be strong enough to push through yet. So then you turn around and you sell your call option right then, and switch straight over to a put. And what happens? The stock goes right back down to where it started at. And if you learn to trade both ways like that, it's great. Like, so when you get finished, and that's what I'm trying to drive home about these price levels. If you have these price levels, you can do this. You ride the stock up, and once it hits resistance, you sell that option, and then immediately convert over. Your day's not done, your trade's not done, and that's where a lot of people quit, and I think they mess up, because they're basically leaving money on the table. And I don't know if it's lack of education, or what it is, but I mean, you can jump right into the opposite side and ride it right back down. And SPY does this just, almost daily. It'll give you 100% return in either direction. So that's something I think you need to keep an eye out on. But I mentioned something about volatility, so I'm going to jump to that. And SPY is a good way to indicate volatility in the market. And I'm going to show you something here. And this was continuing, as you can see. We came down right there, and bounced off of that support, again, price level, and then that's where you take the trade, and then that's your results. 140% return because you know and expect what it's going to be doing at those price levels. So if you don't have your watch list charted out with the price levels, that's something you need to do. And if you don't know how to do that, or you need help with that, there's a link in my bio, and you can go click on it. It's a link tree, and click on it, and then go down to where it says charting watch list, and click on that, and you can actually send your watch list to us, and we'll chart it for you. And also, that's if you want to follow me on Instagram or Reddit, Stock Trauma. That's my handle on those two platforms. But I'm going to switch over now to volatility in the market, and we're going to use SPY and VIX. VIX, I'm not sure if we mentioned exchange traded funds on the SPY, and then VIX is a volatility index. So and this, I know this is kind of difficult to look at. I had to flip it sideways for it to fit on the screen. But what this is a dual shot of comparing the SPY chart with the VIX chart. And again, this is horizontal, but if it was vertical, you would be able to tell that when SPY's up, VIX is down. Okay, so VIX is actually the leading indicator. Excuse me. VIX is actually the leading indicator. If you'll watch, like if it's real volatile in the market, if you'll watch VIX, it's going to let you know what SPY is going to be doing. So if VIX spikes, then SPY is going to drop. If VIX falls, then SPY is going to spike. And this is going back again to the levels. If you have the levels of VIX charted out, then you'll know where its supply and support and resistance is, and that's going to enable you to trade SPY, because you know once it gets to to those levels that SPY is going to mimic it. It's just going to go in the opposite direction. So when VIX is spiked up, you want to take puts on SPY. And so I wanted to and like I said, I'm going to give you a lot more tickers, and that's going to be involved with like my daily routine. But VIX is one of those. That's something that I keep up on. I keep that up on my computer at all times, because if that spikes, that lets you know right there that something's wrong in the market. It's fear. That it's a fear indicator. So when VIX goes up again, if it spikes, then you might want to watch your positions. You need to get to the news and see what's going on, because there's something going on that's making the market volatile. But I wanted to touch base on that a little bit and talk a little bit about the exchange traded funds, and I'm going to make a video specifically on exchange traded funds, and because you have indexes and ETFs, and a lot of times people get those mixed up. So like SPY is a ETF and VIX is an index. So you can't actually buy or sell VIX. It's just it's like the Dow or Nasdaq or something. It tracks the total volatility in the market though. But there's all kinds of tools out there as far as tickers go that you can use to track. There's volume, complete volume tickers. There's one called tick, which is a cumulative tick of the you can get the tick of the buys, the tick of the sales. I mean, if you can think of it, there is some kind of indicator out there, and I'm going to go through a bunch of those. But I hope this helped you out. And again, if there's something that I can help you with, if you want to send those send your charts over to us, we can take care of that. And then that way you'll be, instead of jumping in something and it going the opposite direction every time, you'll know where you're at, and then you can take it from there. But if you want to see more videos like this, just subscribe to our channel, and thanks.